There could be a lot more pain ahead in the real estate market. There could be more pain ahead in the stock market. But at some point in time, when inflation is controlled and interest rates don't have to go up, and maybe they can even head down, things will get better. Hey guys, Omar Khan here from Theta Trading, and today's topic of conversation is how bad was 2022 in the markets, in the stock market, and is there any good news ahead in 2023? Before we get on today's topic, if I could ask you guys a big favor, if you guys can hit that like button, it helps the algorithm, it helps promote the videos to more people. Our job is to create financial literacy and promote financial literacy. So if you could do us a favor, hit that like button, that'd be greatly appreciated. Also consider subscribing to the channel if you find the content valuable. And if you want to book a call with us to see what we do here at Theta, please take a look at the link below. Now, let's get into today's topic. How bad was 2022, and is there any good news ahead? All right. So I have been investing since 1998 or so it's been about 25 years. And this is the third time that I've gone through this sort of market correction, bear market, shall we say. First one was in 2000, 2001, 2002. It was horrific. The tech bubble created all kinds of issues, major recession, and the markets did not do well, but they went to an all-time high. 2008, 2009, same thing. Global financial credit crisis, that you had, loans being given out to people who shouldn't have gotten loans for homes in the United States, and then they packaged those loans and sold them to all kinds of different sovereign wealth funds and pension funds across the world, and that created a global financial collapse that had to be bailed out by the government. This is the second time. So 2008, 2009. This is the third time. And why is this time happening? Well, this time it happened because in 2020, when we had COVID, the governments around the world had to print a bunch of money to give to people so that they get through the economic difficult period that they were going through, right? Because you're not going to work, you're not paying rent, you're not paying your mortgage. Like, it was bad. So if they hadn't printed all this much money, what would have happened? The economy would have gone into total collapse and it would have been a complete nightmare. But they did print all that money. Now, what that has led to in 2022 is inflation. Inflation is caused by too much money chasing too little goods and services. So you have a lot of money that's printed. All of a sudden, people have more money to buy things with. And now they're spending, everyone's trying to buy the same thing. Think of used cars and grocery store prices and even luxury items. Watches, for example, had gone through the roof. And you're thinking, how is this possible? Well, it's possible because, again, if you have too much money chasing too little goods and services, you create inflation. Inflation is a horrible thing for the stock market. The stock market hates inflation because it costs more money for people to borrow money. People are reluctant to buy things. And companies, it becomes more expensive for them to raise money. So if I own a company and I want to raise $1 billion, well, now I have to pay a lot more interest on that. So I might not do that. I might wait it out. So let's take a look at recapping of what happened in 2022, okay? So take a look at this chart here. Major U.S. indexes posted the worst year since 2008, okay? And it was a nasty year, okay? So you can see here the Dow Jones, which is an index that is the most popularly followed index, but it's not all-encompassing. It doesn't have a lot of tech stocks in there. It has a lot of energy and oil companies in there. They were the only things that did well. Even that index was down 8.8%. Now you look at the S&P 500 biggest companies in the United States. That was down 19.4%. Now look at the NASDAQ, which is the tech-heavy index. That was down 33.1%. It was an absolutely brutal year. The worst year since 2008. Okay, so the year was absolutely atrocious. Now, is there any good news ahead? This is horrible news. Things are really bad. Is there any good news ahead? Well, what's happening right now is that the banks around the world, they are happy to do this. Why? They're trying to create less wealth. Right? And I mean by the banks, I mean the central banks. Think of the Federal Reserve, the Bank of Canada. They are trying to create less wealth. They're trying to drop people's wealth down, okay? So if people don't have as much money, they won't do what? Guess what? They won't buy stuff. If they don't have a job, they're not going to buy stuff. If their mortgage payments have gone up. They're not going to buy stuff. So last year was horrific. And very rarely do you see 2 negative years in a row. Like I said, I've been investing for 25 years. I've seen 2 negative years only once in my career, and that was 2001, 2002, and 2000, 2001, 2002. That was actually 3 negative years. It was an absolute catastrophe. The 2008-2009 recession, that wasn't 2 negative years. 2008 was negative. 2009 was eventually a positive because the market had troughed in 2009 in March. Now, what will the year ahead hold? Well, the reality is that nobody knows. We are in an economic uncertain period of time. What's happening right now is the central banks around the world are doing their best job to combat inflation, but we have some problems, right? Jobs are still persistently high. We had a recent jobs report, December jobs report in the United States came in at 235,000 jobs created. The expectations were for 153,000 jobs. So what does that do? If more people have jobs, they're making money, what are they going to do? They're going to buy stuff. They're going to buy goods and services, right? And that is going to keep inflation high. Now, in Canada, we just had a jobs number that came out, and the expectation was jobs to be created in December of 5,000. In reality, 104,000 jobs were created. So we don't know if there's good news ahead. All I can tell you is that the markets have always gone to an all-time high, and I don't think there's any reason why they won't this time because humanity continues to move forward. However, as you can see from the chart, this has been an absolutely brutal year. 33% down on the Nasdaq, 20% almost down on the S&P 500. That doesn't happen all that often. But when it does, it becomes very, very painful. And what the markets are looking for right now is it's looking for inflation, right? So if more people lose their jobs, people have less money to spend, they're going to buy less stuff. And we're looking for inflation to come down. Once inflation comes down, the banks around the world are going to say to themselves, well, inflation is coming down. We don't have to have interest rates this high. In fact, maybe we can even start cutting interest rates and therefore putting more money in people's pockets. But the banks around the world are stuck between a rock and a hard place. The rock is if you don't increase interest rates and keep them high enough for long enough, you run the risk of having runaway inflation, and that's horrible. It just means things keep costing more and more. Someone gets a wage increase, things cost more. You get another wage increase, things cost more. It can spiral out of control. You've seen a few countries have major inflation in the past. Turkey is a recent example of that. But many countries have faced that. So that's their number one job, is to combat inflation, okay? And interest rates are high as a result of that. But what is concerning is to see the amount of jobs that have been created. Jobs are really, at this point in time, pretty high. You haven't seen consumer insolvencies, i.e. bankruptcies, sky high yet, but I think that's coming. So what exactly is the good news in 2023? Well, generally speaking, the year after a midterm election and a negative year, the markets generally tend to do really well. I've done a previous video on this. If you want to take a look at it, take a look at it. Generally speaking, the markets do pretty well after a midterm year and after a negative year. I don't think it'll be any different this time, but what our headwinds are this. We have to get inflation under control. Right now, inflation is running around 6.8%. That's consumer price index. That's a core good of a basket of goods and services that you and I consume on a regular basis. That is 6.8% higher than it was last year. However, in June of this year, it peaked around just over 9%. So inflation is coming down in the right direction, but it's not quite there yet. We're looking to get inflation to 2%. Remember, we're at 6.8 right now. Once we get confirmation that inflation is coming down, the economy has been hurt significantly enough where the banks can start lowering interest rates, or at least not raising them the more, the stock market will love that because it'll have certainty. And that is what it's looking for. And that is what we are looking for going into 2022. How bad will the economy get? Right? And I talked about a rock and a hard place. The rock is, like I talked about, inflation. The hard place is if you don't increase interest rates enough you have a problem, right? If you increase interest rates too much, you could put the economy into a major recession. So on the one hand, you have to keep interest rates up for a long time in order to combat inflation. The other hand is if you keep interest rates high for too long, because it's a lagging indicator, right? Like when you increase interest rates, the effect is not fully felt for some time. If you keep interest rates for a long time at these high levels, maybe you tip the economy into a major recession. And the stock market, quite frankly, doesn't know what's going on. It doesn't know if it's going to be scenario A or scenario B. And that uncertainty is what's led to all this calamity in 2022. And, and so far at the start of 2023 has not been a great start because the market is really uncertain. So that's the word of the day, guys. It's inflation, it's interest rates. How will 2023 do? I don't know. Nobody really knows in the short term. What I can tell you is, again, stock markets generally perform well after a negative year and after a midterm cycle. Secondly, markets have always gone to an all-time high. I don't see why it would be different this time. Why? Because humanity continues to move forward. Our lives continue to get better. And companies continue to make more and more money. Now, there could be a lot more pain ahead in the real estate market. There could be more pain ahead in the stock market. But at some point in time, when inflation is controlled and interest rates don't have to go up, and maybe they can even head down, things will get better. Wait for it. Keep your head straight in terms of how you're thinking of the companies that you're investing in, the properties perhaps you're investing in. Am I investing in great companies? If the answer is yes, I know it's difficult to look in the short term and see how your companies are getting absolutely beaten apart. But look at what's happening long term. Am I happy with this company long term? Do I think they're going to do well long term? So there is some good news coming ahead, guys. 2022, it couldn't have been a whole lot worse. And I do think there is good news coming ahead, but it's really going to be dependent upon when inflation calms down. Thanks for watching this video, guys. I hope you guys enjoyed it. And if you have any questions, please comment. If you'd like to see other videos, let us know. Omar Khan here from Theta Trading, and we'll see you soon.